Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and/or investment strategies recommended and/or purchased by advisor, or product made reference to directly or indirectly will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Well, welcome back, everybody. Seems like this week was long for some reason. Not sure why, but most of them fly by. And been kind of gathering up more information, looking at a lot of things I've talked about on this show for years now. And it's interesting, though, because unless you actually do it, I find that it's incredibly difficult to relate to a lot of the things that you need to do if you're going to get above average performance, because it's not intuitive. It's actually, a lot of it's counterintuitive, and makes it really tricky. And so I thought I would talk a little bit about that. And I've rekindled a relationship with Goldman Sachs, and they have a platform that you can do individual stocks with. I've been getting some requests for that. People, for some reason, they just love doing individual stocks. And I'm going to talk about it, and I'm going to tell you, I guess the thing that's best to do for everybody, and also required, by the way, by the SEC, so it's not like I really have a choice. A lot of people just ignore it or skim over it. And what am I talking about? Well, I'm talking about the volatility of the stock market. If you're going to be in stocks, they're going to fluctuate a lot, not a little. They're going to fluctuate a lot, and you have to be prepared for that. There's no way to get the returns of the stock market without taking a lot of volatility. And that's one of the reasons I started using the annuity for myself and my clients, is because you'd have to do exceptionally well in the stock market to be able to keep up with the kind of returns that they're going to guarantee. Now, it depends on a lot of things, your age. If you're under the age of 50, I'm not so sure I would look at it, because you've got a lot more time, and you can, I think you'd be better off with a larger percentage of your money put into some organized stock investments, whether they're funds, ETFs, managed accounts, whatever they're doing, just as long as it has logic. The thing that I don't want to see is somebody saying, well, let's just watch it and see what happens. That is, you're just going to fail. Okay, I'm not even going to go there. You have to have a strategy ahead of time, and you need to know, because markets are going to fluctuate a lot, which means they're going to go down a lot and they'll go up a lot. And when they're going down a lot, people have a tendency to panic. And if you didn't know ahead of time what your response would be, you are lost. And it's really difficult to do well that way. I'm going to tell you, it's about as difficult as the Browns going undefeated. And by the way, that's really hard for any team. But So any professional ball team going undefeated for a season, that's the level of difficulty trying to anticipate what's going to happen in the market over the next couple of years is. And it's not necessary. I mean, it's literally not necessary. So why would you want to do it? I get it. It's fear and greed. They're emotions. And a lot of people don't like to have to deal with the fact that, you don't realize it, but when you say I'm going to beat the market all the time and I'm going to get these great returns, how do I know that? Because I read it on the internet and that was in somebody's ad. That's really difficult. You're making it hard on yourself and everybody around you, by the way. You're going to be unhappy and upset. And if you can't stand a 50% drop, don't put all of your money in stocks. It's that simple. I've been using that technique to gauge someone's risk tolerance when they call in and say, hey, look, Bill, I'd really like to get a good plan. You talk about stocks, you talk about exchange-traded funds, which are the two main stock categories. You talk about fixed income. I have a favorite at the fund. The fund's going to, there's an extremely high probability that the fund does better than you or I am going to do. Why? Because it's managed by a team of professionals. This is all they do. Okay? And the expense ratio is so small, it's mind-boggling. And they're not just buying treasuries, which is not a bad idea, by the way. But if you're buying treasuries today, you better be locking in. I would be locking in. I'd probably be looking out around the 8 to 10 year range right now, because interest rates are starting to edge back down, and I never thought that they would get as low as they did this last time. I just didn't think it was possible in the United States of America for them to drop interest rates down under 1%. That was mind-boggling. So anyway, when you have an annuity, that rate's guaranteed for as long as you live, okay? And it's going to be incredibly difficult to match. Incredibly difficult to match. I think people are going to have an incredibly difficult time keeping up with the annuity in their stock accounts. Okay? That's the way I feel, and because of where valuations are, where we are in the economic cycles. People don't talk about that at all anymore. And but it's a real thing. The president has some control over economic activity, not nearly as much as people think they do. They get the credit and the blame, and none of it's deserved. They can do things, monetary policy, but that's got to go through Congress and Senate. It's hard to get bills passed, and even when you do, government spending is only a third of GDP. Now, a third is a lot, but it's not all of it, and that's what I hear from people. They think that the government has complete control over this, and they don't. In fact, only having a third of the control, that's 2/3 of the economy is run by consumers and the businesses that are providing the products and services. So 2/3 of it is literally private enterprise. And so it's just very difficult to try to predict that sort of thing. It's a lot easier to predict what your needs are going to be. Easier. It's not completely, that's not a layup, by the way. And I do this all the time. I lose track. But anyway, so this is one of the reasons I've got a fairly significant amount of my money in annuities now, largest I've ever had. And I'm going to be 62 in February, by the way, so I'll be eligible for first stage Social Security. I'm not taking it. I don't really need the money right now. And so I'm going to let it go because it goes up a lot each year. After the age of 67, it stops going up on a guaranteed schedule. The past, it's kept up with, they've increased it as the cost of living has gone up. They've been increasing Social Security, but that's not a guarantee. the schedule from 62 to 67, from when you're first eligible for Social Security up until 67, then that schedule is a guaranteed schedule. It's scheduled to go up. And I believe it's 8%, but I could be wrong on that. I've been running around like a chicken with my head cut off, trying to get more done than is humanly possible, actually, sometimes. Like putting a model together. Do you know how many millions of simulations you have to run? And I know when I say million, people go, oh, yeah, right. No. Yes, you can do millions of simulations with today's software if you're willing to pay for it. The computer's changing one number, one variable, and it'll run the whole test over again. And I'm going back over about 25 years. So, and then it'll make another minor change, and then it'll run it again, and it'll make another minor change. So I'm not there hitting the button. I'm setting it up so that it changes those variables and then runs it again on its own. And I just come back and see the results. And I typically focus on looking at the best results, and there's a range where you can kind of see that. That's how you know you're onto something, by the way. If there's a cluster of outcomes, things that have happened where the numbers are relatively close to each other. And I give an example. There's not a huge increase in returns when you go from 40 to 50 stocks in your portfolio. Actually, that has a tendency to dilute it a little bit. In other words, holding 50 stocks, the top 50 stocks are not going to do as well historically as the top 40 stocks will. And 40 you've got some volatility there. That's my biggest reservation about this, because I'll talk about it, I'll show somebody, and I know all they're looking at is the return, and they don't know how you get to that return. Well, you know how you can make several $1 million in one night? Yeah, fight your way up to a championship in boxing. It's the heavyweight division. What I'm talking about is there's an awful lot of work, effort, and expense, for that matter, the training, and the chances for most people to get that far are pretty much not good. But fortunately, stocks are not as hard as that is, but there's still an unbelievable amount of effort that goes into building a model. And then people, and oftentimes people don't understand it. They don't want to understand it, and they have a really difficult time because they don't want to understand it. We'll talk about why that is when we come back from these commercial messages. This is Bill Bullington, right here on 1420. Stay tuned.
I've been sick and tired, being sick and tired.
Hey, so question for you. Have you ever been through a Cleveland winter before? The harsh weather is on the way, and if you've got a leaky roof right now, or if you've got shingle issues, you need to take care of those, and you need to call Sky Roofing right now. If you've had leaks repaired in the past, maybe by a company that isn't around anymore, don't go with the fly-by-night storm chaser companies. Go with a company that's been here for a very long time and is going to be here for a very long time to come. Talking about Sky Roofing, taking care of homes and buildings in Greater Cleveland just like yours for over 22 years. So if you've got leaks, if you've got shingle damage, you need to get those things taken care of. Or if it's time to replace that roof altogether, call Sky Roofing, 440-349-6750. And if you've got new construction and you need a roof put on a new building, you call Sky Roofing. Take advantage of great rates on 5 to 7 year financing, including 12 months, same as cash. Call now, 440-349-6750. Sky Roofing is roofing done right.
Instead of watching all that other stuff on TV, and there's a lot of it you don't really want to see anyway, what if you could watch, say, Greg Laurie on demand whenever you want? Be pretty cool, wouldn't it? Well, now you can. Forget the TV, boot up your PC, and log on to lightsource.com. That's where you'll find streaming video of A New Beginning with Greg Laurie. Ministry videos on demand at lightsource.com.
No doubt about it, we're spending more time at home, which is the perfect time to make it more functional and beautiful. Hi, Ed Flash Ferentz here for Artistic Renovations, Northeast Ohio's premier and award-winning remodeler. Artistic did a fantastic job with our kitchen in 2016, and last year, they were back for the master bath. Oh my word. Do yourself a favor and go to artisticreno.com. Believe me, you'll love their ideas and without question the finished product. For a virtual consultation, call 216-520-0838 or visit artisticreno.com.
You've heard the saying, all good things come to an end. Well, not always. Sometimes they just take a break. That's what's happening with Our Lady of the Wayside's car donation program after 24 years and 96,000 rides donated. Pretty amazing. Here's the story. The car lot's owners sold the property, making it impossible for car donations to be accepted at this time. According to the Wayside CEO, Terry Davis, the next right steps will be determined and communicated soon, so stay tuned. In the meantime, Terry and the entire team at the Wayside thank you for your continued support of the 450 individuals with developmental disabilities in the Wayside's care. And please take note, you can still support them by making a donation at thewayside.org. Thinking about updating your home? Well, Joyce Factory Direct specializes in replacing old, outdated windows. Proudly made right here in Cleveland, Joyce Windows features their exclusive Smart Shield high-performance glass, which means you'll be getting the most energy-efficient windows for your home directly from the factory. Customers just love how much warmer their house is and how easy their new windows operate and clean. Right now, you can save 50% on all installations. Just call to schedule a free consultation with on-the-spot pricing, 440-243-5700, or visit joycefactorydirect.com.
Well, welcome back. This is Bill Bullington. I'm here every morning from 11 to noon, every Saturday morning. 11 to noon. Boy, every day, that would be rough. Anyway, yeah, we were talking a little bit about just about everything, actually. One of the things I like about today's marketplace, one of the investment choices I like are the annuities from Nationwide, and these are a specific type. There are tons of different types of annuities out there. I mean, literally hundreds, and if not thousands. I think I went to a database once and looking for all the various annuity products that had been issued. There was well over 10,000, that had been issued in the past, and that means they're, unless somebody died or cashed it in, those things are still in existence, and just mind-boggling. But the whole concept behind it is you're going to invest a sum of money for some sort of guarantees. And it could be something that looks a lot like a tax-deferred CD. The rates are generally a little bit higher on those. It's tax-deferred. That's a big deal. That's one of the reasons that people find them really attractive. But and then there are another types of annuities, or another goals, I guess I should say, of annuities, is to generate as much income as they can. Now, generating income and interest on a CD are closely related, but they're not exactly the same. Because when you're just looking for the highest income, and you take for example, a life-only annuity, well, that's good for your life. It'll pay no matter how long you live, even if the insurance company runs out of money that they were managing for you in the annuity, they'll have to take the money out of their own pocket and pay you until you pass away. That's called a life-only option. And the one that I'm looking at through Nationwide has you've got a life-only option but you can have two people on it. So you can have a beneficiary. It's for couples, married couples. So in this case, it'll pay until the first person dies, probably the owner of the contract. And then there are two co-annuitants. You can set it up a couple different ways, and I won't bore you with those details. But the bottom line is there's an income that's going to be paid until both people have passed away. And then if there's any money left, it'll go to the beneficiaries. And that's how the Nationwide product works. But like I said, there are literally thousands of contracts out there, and unfortunately you have to read them to be able to tell what your benefits are, and it's not written in super simple English. And I don't know if that's intentional or not, but sometimes it feels like it is. Anyway, Nationwide's got this site. You can go to it if you'd like to. You can hit me up. Just send me an email, and I'm not going to bother you, by the way. I don't hound people. That's not my style. If you like what you're reading or you have questions on what you're seeing, when you probably will, then you feel free to email me back or set up a meeting. You can come in the office and we can talk about it. I'll pull it up on my computer and just walk through simulations and kind of give you a really good idea of how that might work. And I've got one, and actually I have two, and I feel really good about it. Once I reach full Social Security age, which is 6 more years from now. 5.5 actually. Reach full Social Security age and don't get penalized for making money. Then I can turn that income on and see if you take Social Security before your full Social Security age and you're earning income, they penalize you. They take back some of your Social Security. You need to figure that. You need to sit down with an advisor to go through that. In case that's what you were thinking about doing, setting that plan up, that can be a really nasty surprise. So that's one of the things you don't want to do when you get to be close to retirement age. As few surprises as possible, and that's not easy. I mean, I look around and I see how complicated everything is these days, and I'm going, wow, that blows my mind. So I'm kind of glad I do what I do, because I see a lot of the financial stuff that goes on now, whether it's a car warranty or homeowner's warranty and all that kind of stuff. I'm just like you guys. I mean, I read them. I'm not sure I understand them. But when it comes to my money, how I'm going to pay for all that stuff, I am at attention, paying attention. And I think it's kind of funny. But like I said, if you'd like to see it, they call it a tool, the guaranteed income tool. You can go in there and put put your own specific data. If you have a spouse, you can put your spouse on there. If you don't need to. The amount of money, the years you have to let it build before you're going to start taking it. And I would say probably this one it has a guaranteed schedule for 10 years. After 10 years, the payout is still going to go up, more than likely. They just don't guarantee it. But the reality is you're getting older, and they have a published schedule of, if I waited until this age, this is what it would be worth. If I waited to this age, what would I get then? After the 10 years, those are not guaranteed. They can be changed. So, but that 10-year period is that's in stone. When you sign that contract, you have now obligated that insurance company to stick to that schedule. They have to stick to that schedule. So that's one of the things I really like about it. And when I see what investments have done, and I mean, it's the returns that they're looking at are really hard to achieve running regular investment management accounts. They're just really hard to achieve. So, you mess up once or twice there, and you don't have, at that stage of your life, you don't have enough time to recover. That's a problem. That's one of the reasons I really, really appreciate being able to have a base. And here's what I would suggest. If you're getting closer to that retirement time, and you're looking at mapping out a strategy, try to have all your basic expenses covered with something that's a guaranteed income. Yeah, Social Security is going to be guaranteed. Social Security gets indexed for inflation. That's good. That's a big deal. and see how far that goes to paying your everyday expenses. Once you've got that done, now you want to build in, that's where you might want to start looking at the annuities. How much more money do I need that I need to count on to have that coming in? And then you can just put that number in. We can run the numbers, whether you're married or single, doesn't really matter. It'll be, if you're insuring 2 lives or guaranteeing the income over 2 lives, the payment goes down a little bit because the insurance company is now liable for 2 lives instead of just 1. So, but it's generally not, it's not that bad actually. But go back to once you've got that covered, so you got all your basic living expenses hopefully covered between Social Security and whatever pension you get and some sort of guaranteed income. Then you take the other money you have, and that's where you can invest in stock portfolios, fixed income portfolios that might have maybe a little bit of high yield bond in them, or maybe you like tax frees, whatever you like. At that point, your basic expenses are covered, and it's not as crucial that does all that well. And that's a really nice place to be. And I can tell you, a lot of people don't get there. I look at a lot of people where they need a guaranteed income, and it's a fairly significant percentage of what they earned before they retired. And but bottom line is you just have to try to do the best you can, and that's one of the reasons that I went independent so many years ago. I am not there aren't any products out there that I don't have access to that I cannot use, and I use Fidelity as my primary custodian. I've got one of the world's largest banks. That's online. They are an option that you can use. Goldman Sachs. They bought out this firm that had this super sophisticated portfolio management tool, and that's the tool I would use to do these 40 stock portfolios that I was talking a little bit about. And I'll be talking about it more and more. I just settled on the actual models that I'm going to use. And now we have to get together. We can only do it with Goldman Sachs, by the way, and which is not a problem. I know Goldman Sachs has if you go to their regular website, it says you have to have $500,000 just to have an account there. Well, as an investment advisory firm, that number for us is a lot lower, and the vast majority of people would be able to do it if they want to. And it's something that if you really like it, if you like the stock market, and you like the activity levels, you're really going to like this. I will tell you this. If it's not an IRA, you don't want to put it in. You probably don't want to put it in because when you buy an exchange-traded fund, all these small little transactions where they're doing the rebalancing of the funds, those don't get reported. You only get a taxable event in many of the ETFs when you sell the actual shares. So as long as you haven't sold anything, all the dividends that they've reinvested or all the adjustments they've made, they've sold some Intel and bought some Microsoft, those transactions, they don't show up. You only see, the only thing that gets reported is the share price. That's a big advantage. That's a big advantage to having ETF portfolios in your taxable account. And a lot of that movement can go on inside the fund, yet you aren't paying taxes on it. That's a pretty good deal. That's a really good deal. So anyway, so I took I wanted to see what this would do. Let's see here. And what this would do over the past 10 years. And so it goes all the way back to 2014. It's up about 336%. That's a lot. Like a lot. I'm not sure how reproducible that is, actually. But I do know that you're talking about almost a 35%, I mean, nearly a third better than one of the top performing ETFs that almost nobody's beaten. It's in the top 90%. And this one's doing a third better than that, or at least it has in the past. And again, there's so many things that can happen. And there were lots of time periods. There was looks like a almost 6-year time period where the returns were nearly identical, which will happen quite a bit in something like this model because we're just holding fewer of the stocks in the index. It's still indexing, but we're not holding all the stocks in the index. We just want the ones that are going up the fastest right now. So again, it's an aggressive model, and because of our affiliation now with Goldman Sachs, and they bought out this firm called Folio, so they put a lot of money into their platform. We can actually run a strategy that's sophisticated as that for just about anybody. And again, if it's taxable money, probably you can, on an after-tax basis, I can show you a couple of ETFs that will actually beat it. But if it's in an IRA, good luck. That strategy is probably going to be it'll minimally be in the top 10% of all funds in their category. So that's exciting. I worked a very long time on that. Not easy work. It's also expensive. The data is really expensive. I might even at some point in time start to publish the actual stocks on a monthly basis in case somebody wanted to follow that. I haven't decided yet whether or not I really want to do that. But it is a lot of work. And the thing that kills me is the software is so expensive. That just blows my mind. Anyway, so it's all in an effort to be able to help you build retirement savings, how to make money in retirement, to offset the money that you have to take out. And, everybody's going to be different there. And it's one of the things I think about very often. You're doing retirement planning. Okay? I've never seen two households that were identical, ever. I've been doing this a long time, and it's really it's got to be unique. So you have tools like, let's say, take this model for example. I've got other models that we use as well, but with this one model, I would look at this and I would have a conversation with someone, try to find out what they're trying to do, and the reason that I even brought this back was I was getting requests. There are an awful lot of people out there that just want to do, I just want to do individual stocks. Okay. Anybody can do ETFs. Well, that's not true. Can you name the top 10 stocks in the ETF with the symbol SPY? You mean SPY? Yeah, that's an S&P 500. Probably not. So you have this, people are overly confident. I'm just flabbergasted by that constantly, thinking that there's nothing to selecting stocks. Well, if you don't know how to pick stocks in the first place, you have no idea what they're doing with your money. And that's great, right? Well, it worked. Yeah, all the way up until it doesn't. And one of the big reasons to get to know this information, especially if you're going to manage your own money, is when you get to retirement, that's it. You don't have, you're not going back to work putting more money in your 401k plan to try to make up for any mistakes or accidents that occurred. So, time is of essence, and you really need to know what you're doing because you don't have enough time to make up for really big mistakes. And when I come back from these commercial messages, we'll go into some details on how you can kind of check yourself, see where your educational level is and where you might need to brush up. So back right after these commercial messages.
We are in studio once again with our friend from Empire Window Company, Bill Gardner. Bill, how you doing?
Pretty good. How about you, Bob?
I'm doing well, but not as well as I think some of your new customers are going to be doing. Let me make sure I understand this. You are offering a house of windows for $3 a day, a house of siding from $6 a day, and a house of windows and siding together for less than $10 a day. Is that right?
That's right, Bob.
I don't understand. I mean, you're talking about a house of windows or a house of siding for about the same price or less as a cup of coffee a day.
With the weather changing quickly, there really couldn't be a better time for these type of specials.
Yeah, and these specials are pretty unbelievable, though. I hope you're ready. I hope you got staff hired to take all of the phone calls you're going to get. The phones are going to be ringing for a deal like this.
I look forward to working with your listeners, and we'll be ready. We've been doing this a while.
Over 60 years in business, right?
That's right, almost 65 now.
Wow, that is incredible. Incredible pricing, incredible service, and incredible install as well. I don't know if there's ever been a better time to call for windows and siding. Call 855-76-EMPIRE. That's 855-76-EMPIRE. And to log on at empirewindowcompany.com. Hey, Bill, why do you do this?
Because you deserve a fair price.
Do you ever find yourself saying, I need a vacation? Vacation Fixation can help. At Vacation Fixation, we specialize in all-inclusive trips and cruises to Mexico, the Caribbean, and Disney vacations. Why choose us? Our clients book through Vacation Fixation because they are frustrated with online trip brokers and timeshare scams. Whether it's a weekend getaway, a family trip, spring break, or honeymoon, Vacation Fixation will personalize a trip just for you. Want to know the hottest destinations in Cancun, Punta Cana, Jamaica, or Puerto Vallarta? Interested in room upgrades, beach reviews, or details about resort restaurants? How about finding a trip with a direct flight? At Vacation Fixation, we take all of your specific travel requests and shop our suppliers to find the best deal. What's the cost? Our suppliers pay us so you don't have to. Call 330-573-8147 for more details. Or you can visit our website at vacationfixation.com or check out the deal of the day on Facebook. Vacation Fixation.
Is it finally time to update your bathroom? Bath Planet, a division of Joyce Factory Direct, specializes in replacing and converting old showers and tubs into new, beautiful bathrooms in as little as one day. We have transformed thousands of bathrooms just like yours into a spa-like oasis that has homeowners excited to use their new bathtub or shower. Right now, all bath installations are 50% off. So call to schedule a free consultation with on-the-spot pricing. 440-243-5700 or visit JoyceFactoryDirect.com.
Thank you. Well, welcome back. Bill Bullington. I'm here every Saturday morning from 11 to noon, 1420. If you'd like to speak with me personally, just give my office a call. And website is that's my email address. My website is bullingtoncapital.com. The phone number is 330-664-0700. 330-664-0700. And we'll try to figure something out, try to help you develop a plan for retirement income. I sometimes I get the questions like, when should you start planning for retirement? And the real answer is when you're about 12. And I know people think I'm kidding around when I say that, but when you see how much money you have to accumulate, nope, 12 is pretty good. But the bottom line is, if you're thinking about it now, it's probably a good time. And it's not as hard. I have played around with so much software over my career. I still do it. I'm still checking software out constantly, doing research. Is this going to help? Is it not going to help? And I'm just amazed. And there's finally somebody decided to steal my idea of putting your plan down on one page. That's been around for a while now. And but that's where I started from the very beginning. It's like, hey, realistically, okay, you got sources of income from Social Security or a pension, and then you have investments. And then you've got the ability to work. Those are your three primary sources of income in retirement. There's work that you could still get. A lot of people say, well, I don't want to work at all. Well, good. Then just take that one off the table. You've got Social Security or pension, whatever that's going to be. Those are guaranteed income sources. Great. Write those down. Then you've got the assets. Fantastic. Take the amount of assets you have and multiply that by 4% actually. Yeah, and that's the old 4% rule. That'll give you a really good idea of a sustainable income in retirement. Now, I know you're probably either driving or doing something else. You're not just listening to the radio program. So, and this is where people like myself can be of a lot of help. I have Social Security software now. I've been working with this stuff for a long time, and it's not easy, by the way. Social Security is unbelievably complicated. It's a good system. It's a really good system, but you better know the rules. And some people really make a big deal over that. The reality is, if you started taking it really early and decided, hey, I didn't need it, and now I'm paying tax because I was still working, they just have a conversation with somebody who's got some knowledge in there, and you can actually call them yourself or call someone like myself who's somewhat familiar with the rules. And anything I don't know, I'll look up. And that's basically how I've approached my whole career. And after 30 years, I've seen an awful lot of stuff. So, and if I, by the way, it's constantly changing. I mean, you should see what they've done to uniform gift and minors accounts. It blows my mind. Yeah, so, and I know that because I've had people that were calling and asking questions and trying to develop a plan for their grandchildren. And interesting. So, but the bottom line is, if you're looking for a source of income to supplement your other, like pension, Social Security, it's guaranteed. Okay, annuities are typically the most popular way. Why? Because an income annuity is guaranteed by the insurance company. Try to stick with if they're not at minimally A-rated, I'm not interested in that. I don't want to take risk with the insurance company that I'm insuring my retirement with. And so I'm going to look for the higher rated, the safer companies that have been around for a long time. I like the ones that have more than one line of business, incidentally. And why? Well, if the life insurance portion and life insurance and annuity portion, if they have some bad experience there and they have to pay out more than they were making on those products, they've got other businesses that they can actually take money from to pay out on those claims. And that's pretty good, especially if you're not selling a lot of homeowner insurance in Florida. I cannot imagine, the insurance companies down there. And I was a victim of that myself. I don't even remember how long ago it was, but it was a long time ago. And quick story, there was a little insurance company, and they went in and were selling a ton of insurance in Florida because they had, I think it was either 3 or 4 major hurricanes in a row, 4 years in a row. That hadn't happened in over 100 years, if I remember it correctly. And I may not remember it correctly, but it was a really long time period. And so, what are the chances of a fifth one coming? And I should have known. I bought that stock. I had a bunch of that. Warren Buffett was buying that stock. There's this guy. He used to be a really popular, famous value investor. His name was Robert Rodriguez, and he was buying the stock. And they had, I forget, all their claims added up to a lot less money than they had in reserves until that last hurricane hit. Oh, geez. Yes, a 100-year event, and that should have been an easy one, and it wasn't. So that's one of the reasons that I don't buy a ton of individual stocks anymore. And if I do, it's like a Procter and Gamble or Hershey, Clorox. They have really long time periods where they don't make much money, or at least they have in the past 10, 20 years. And but over super long time periods, they've done incredibly well. And unless people quit washing their clothes and eating chocolate, they're probably going to stay in business. Not that I'm recommending those stocks right now. I would never do that. In fact, almost all of them are fully valued, and that's one of the reasons have been talking about annuities by so much. When a stock is fully valued, or let's say it's slightly overvalued, okay, so if they continue to grow at their current growth rate, somewhere around 10-12%, that's the neighborhood that I like to stay in. I like to see them being able to grow that much, and a lot of it's mostly organic growth. I don't like to see them grow by acquisition. That's a lot harder, in my opinion. Anyway, bottom line is there's got to be fairly steady growers if I'm going to buy stock in them and put them in my portfolio, and I need to understand it. And I understand that there is a tremendous amount of fluctuation with those stocks. It is mind-boggling how much they go up and down. So that's why the annuities are so important. And I was getting a lot of kickback from people when I first started bringing those up. And realistically, it was me. I was getting older. I was looking at it and going, I'm not sure this is the smartest thing to be doing, as I'm getting closer to retirement. What are the other options that are out there? And even if you're not that close, I could see easily somebody in their early 50s that would look at this and go, yeah, and there's a really good chance that the guaranteed numbers on these things are going to be better than the stock market's average annual returns. Not that I don't think stocks are going to crash. I hope they don't. But the valuation levels are not so high that I'm ready to run. In fact, I just built a nice model that based on the fact that stocks are not selling at prices like they were in March of 2000, if you're that old. I'm giving my age away here. But and then 2007, 2008, and that was a little bit different, by the way. That was aggravated because it was an election year, and there was a ton of chaos, and Congress had stopped cooperating, trying to affect the outcome of an election. Man, oh man, I hate to admit it, but politics do have an impact. It's not as much as people think it is over the stock. It's not as much as the average person thinks it is over the stock market, and I can prove that. But it still has an impact. It's not life or death. They can slow it down or pick it up, and the market has a tendency to overreact in both directions. If it looks like it's going to be activity that's going to slow the economy down, you're going to see the market drop a lot, like a lot. If they continue on that path and don't right their ways, and in fact, the length of the depression is really dependent upon how quickly the government responds and the Federal Reserve to the things that are happening. And they know what they need to do. They absolutely know what they need to do to, quote unquote, fix it. The long-term effect of that is that it can be inflationary. Okay, so prices are going up. Well, if the market goes up, but prices go up too, people don't really notice as much because the market's gone up. They see the balances in their 401k go up. They go, well, we really don't like the price increases, but at least we're making more money. And it's just it's really, I hate to say it, it sounds like one big game, and there's a lot of truth to that. But so you need to know the rules. When the government starts to curtail, you start hearing them talking about trying to slow down the economy. That means they're going to start raising interest rates. Banks are going to get tighter on who they're going to lend money to. And when they're not lending as much, not as many cars get sold, not as many houses get sold. All the people that are involved with those industries, it just slows down. The market has a tendency to overreact sometimes, not always. But it's another thing that drives me crazy about the market. It doesn't react the way you think it might or the way it did the last time. And it could be in the right direction, but maybe it's not enough, maybe it's too much. And so that's, I guess, one of the reasons that people like me still have jobs, because it's hard to stay neutral there are some things that I'll talk about next week because I've only got a few more minutes here. Some things that have been occurring. I like to study the market a lot and just to see what's happening. And it appears on the surface that there are certain types of algorithms in these exchange-traded funds who, the ones that have these particular characteristics have done better. And we'll talk about why I think that might be and if that's ever going to change again on next week's show. Or you can call me, 330-664-0700. We can have a conversation about it. And I only got a few seconds here. This is Bill Bullington. I'm here every Saturday morning from 11 to noon. I hope you guys have a good week, good investing, and good luck.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
The preceding program has been paid for by Bullington Capital Management, LLC.